Welcome to Interest.co.nz's morning briefing of what's news here and around the world. Everything you need to start the day in 90 seconds at 9 o'clock. Starting now with news just to hand that the Reserve Bank of New Zealand has kept the official interest rate on hold, as expected. Economists had forecast that worries about the global credit market turmoil and slower domestic inflation would be enough to keep the central bank on hold. We'll be back shortly with more detail on this decision. But first, in news from overseas overnight, initial relief after the Fed's surprise rate cut ebbed away late on Wednesday as fears resurfaced of a US recession and what that would mean for the global economy. German, British and French stock markets fell sharply and the Dow was down in late trade. Investors are also worried about how the Fed reacted to the market troubles and are questioning why the panic move was necessary. They're wondering what is just lurking in the banking system that caused the biggest rate cut in 24 years and the first emergency cut since terrorists destroyed the Twin Towers and attacked the Pentagon. And just to show how worried people are, the 30-year Treasury bond, which is the one that people watch closely, hit a record low, and the gap between one-year Treasury yields and official interest rates is the biggest it has been since 1984. That implies the market sees the Fed cutting rates another 150 basis points in the next year. The one-year yield fell well below 2%, its lowest since April 2004, and that means the risk premium between New Zealand one-year swap rates and US Treasuries is now well over 5%, making our currency that much more attractive. That was 90 seconds at 9 o'clock. I'm Bernard Hickey for Interest.co.nz.